Daniel, what happens with Turkey, the Turkish lira and that economy, which, as we heard earlier, is so important even geostrategically from a NATO point of view?
Absolutely. Well, thank you very much. I think that the key thing about what's happening in Turkey is that the country has been ignoring the rising imbalances, not only a trade deficit, but a fiscal deficit. And the central bank continued to increase money supply dramatically in the hope that a weak dollar and low interest rates would continue to flood the Turkish economy with cheap dollars, with foreign investment, with more money coming from outside countries. And what happened is what in the book I call the sudden stop, which is that all those imbalances continue to grow, and then what happens is that suddenly it changes. And when it changes dramatically. And what we're seeing is that with a stronger dollar, with rates rising in the United States, we're seeing how money is coming back from emerging markets into the United States. And this is, and the economies like Argentina, like Brazil, and Turkey, which have increased their imbalances significantly in the last, especially in the last year and a half, and increasing indebtedness in dollars, are the ones that are suffering the most.
Is Turkey, isolated though in the sense of contagion, or might it actually contribute to some problems elsewhere in the world?
I think that Turkey has, very quite differentiated factors, and the principal one is obviously that the growth in money supply has been phenomenal, and that the imbalances that the government allowed the economy to enter into were very large. But it's a symptom. It's a symptom of emerging markets that have accounted for almost 70% of the increase in dollar debt in the last years, and at the same time have not used this period of low interest rates and weak dollar to improve their economies. So I think that what we're seeing, is if you look at the list of those currencies that are suffering the most, the ones that are suffering the most are obviously the ones that have entered into largest imbalances in the last, especially 2 years, and the ones that are sort of maintaining a little bit of strength relative to the dollar are those that had, let's say, a tighter grip on fiscal and trade imbalances.